Before we begin, remember that this video is for educational purposes only and isn't insurance advice. Always consult a licensed professional for your specific needs. Insurance can be confusing, but the right information can save you thousands. Are you paying for insurance you don't need, or worse, leaving your most valuable items completely unprotected? Whether you own your home or rent an apartment, the wrong policy can cost you thousands when disaster strikes. Today, we're breaking down exactly what you need so you can protect your wallet and your peace of mind. Alright, let's start with the real-world problem. This is the part that helps you understand what is actually going on before you spend money. The biggest difference is who owns the building itself. If you're a homeowner, your policy may want to cover the physical structure against fire, wind, and hail. Renters don't need this because the landlord's insurance handles the walls, roof, and foundation. Misunderstanding this can lead renters to overpay for coverage they can't even use. Both policies protect your stuff, but the limits vary wildly. Whether it's your couch, clothes, or electronics, you need to calculate the total value of your belongings. Many people underestimate how much it would cost to replace everything at once. Don't just guess. A quick walkthrough of your rooms can reveal thousands in hidden value. Liability is your shield if someone gets hurt on your property and sues you. For homeowners, this often covers dog bites or slip and fall accidents in the yard. For renters, it's equally important if you accidentally cause a fire or a leak that damages other units. It's often the cheapest part of your policy but provides the most financial protection. Homeowners insurance is significantly more expensive because it covers the entire asset. Renters insurance is famously affordable, often costing less than a few pizzas a month. If you're renting and skipping insurance because of the cost, you're likely overestimating the price. Always get a quote before assuming it's out of reach. If you own your home, your policy is more complex because the risks are higher. Let's look at what actually drives your premium. This is the big numbers on your policy that represents the cost to rebuild your home from scratch. Note that this isn't the market value of your home, which includes the land. If your house burns down, the land is still there, so you only insure the sticks and bricks. Make sure this number reflects current local construction costs, not just what you paid for the house. Your policy usually covers things not attached to the house, like fences, sheds, or detached garages. Typically, this is capped at 10% of your dwelling coverage. If you've built an expensive guest house or a high-end workshop, that 10% might not be enough. Check these limits if you've added structures recently. If a fire makes your home uninhabitable, loss of use pays for your hotel and extra food costs. This is a critical safety net that prevents a disaster from becoming a total financial collapse. It covers the additional living expenses, meaning the amount above what you normally spend. Keep your receipts for everything during a claim. Most lenders require homeowners insurance to protect their investment in your property. They often bake the premium into your monthly mortgage payment via an escrow account. If you change policies, you may want to notify your lender immediately to avoid force-placed insurance. Force-placed insurance is much more expensive and offers less protection. Quick reminder, this isn't personal advice. Policy terms and rates vary, so always compare and consult a licensed agent. Renters insurance is often misunderstood as just stuff insurance. It's actually much more versatile than that. A surprising feature of most renters' policies is that they cover your belongings even when they aren't in your apartment. If your laptop is stolen from your car, or your luggage may improve while traveling, your renter's insurance usually covers it. This makes the policy valuable even if you don't think your furniture is worth much. Always check your off-premises limits. Your landlord's insurance covers their mistakes, like a roof collapsing due to age. However, if you leave the bathtub running and flood the neighbor downstairs, you're liable. Renter's insurance protects you from the landlord's insurance company coming after you for damages. It bridges the gap between your personal actions and the building's integrity. This is a critical choice. Actual cash value, ACV, pays what your 5-year-old TV is worth today, not much. Replacement cost pays what it costs to buy a brand new version of that TV. Always opt for replacement cost coverage if possible. It costs a few dollars more, but ensures you can actually replace your life after a loss. standard policies have holes. Knowing where those holes are can save you from a denied claim. Almost no standard homeowners or renters policy covers damage from rising surface water or floods. If you live in a flood zone, or even if you don't, you likely need a separate policy through the NFIP or a private insurer. Don't wait for a storm warning to check this, as there's usually a 30-day waiting period. 1 inch of water can cause $25,000 in damage. Standard policies have sublimits for high-value items like jewelry, firearms, or fine art. For example, your policy might only cover $1,500 for jewelry, even if you have a $10,000 engagement ring. To cover the full value, you need to schedule these items individually. This usually requires an appraisal that guarantees full reimbursement. Your deductible is what you pay out of pocket before insurance kicks in. Raising your deductible from $500 to $1,000 can significantly lower your monthly premium. However, you may want to ensure you actually have that $1,000 sitting in a savings account. Choosing a deductible you can't afford is a recipe for disaster during a crisis. One of the easiest ways to save money is by bundling your home or renter's insurance with your auto insurance. Companies often give a 10% to 25% discount for having multiple policies with them. This also simplifies your life by putting all your coverage under one login. Always ask for a bundle quote when shopping around. Now that you know the basics, let's look at how to actually pull the trigger on a policy. Before you buy, take your phone and walk through your home, filming every open drawer and closet. This video serves as proof of ownership if you ever need to file a claim. It also helps you realize if your personal property's limit is too low. Store this video in the cloud so it's safe even if your phone is lost. The declarations page is the one-page summary of your entire policy. It lists your limits, deductibles, and effective dates. You should review this page every year to make sure the coverage still fits your life. If you've bought a new expensive bike or renovated your kitchen, your debt page needs an update. If your situation is complex, like running a business from home or owning rare collectibles, talk to an independent agent. They can compare multiple companies for you and find niche riders that standard online forms might miss. Insurance is about risk management, and sometimes a 15-minute talk with an expert prevents a massive future loss. That's the practical version of what matters most. The big idea is to understand the problem, compare the right details, and avoid rushing into an expensive decision without context. If this helped, like and subscribe for more practical guides that help you compare costs, understand quotes, and choose the right pro with more confidence. If this saved you money, like the video and share it with someone who needs it. Thanks for watching. Remember, this is educational content only. Talk to a licensed insurance professional before making any coverage decisions. Subscribe for more plain English insurance guides.